the biggest thing is that you have the biggest uncertainty in terms of tariffs. A lot of S&P 500 companies have exports coming from overseas, and these tariffs are impacting them in some way. But we still see the U.S. markets running up. Do you think that U.S. market have peaked, or do you still see a big runway for them?
No, the U.S. market's not running on the tariff story. The U.S. market's running on the AI theme and what I call the AI capex arms race. And that's actually been the key theme the U.S. market's been running on since early 23, when the whole AI theme entered the market, when Microsoft invested in OpenAI. So since then, the 4 hyperscaler stocks plus NVIDIA have accounted for nearly 50% of the gains in the S&P 500. So actually, the U.S. stock market's not really got much to do with tariffs, and the economy is all about this AI capex theme.
And you see that AI capex theme has run out of steam?
No. All the evidence right now today is that the AI capex is accelerating. So we've had this AI capex story for running for 3 years, but earlier this year we had this event when the Chinese came up with DeepSeek in late January, which in my view was a very important development and remains very important. And the message of DeepSeek was that these large language models, which these hyperscalers are investing in, OpenAI are investing in, are going to become commodities. And so the AI stocks corrected sharply on that for good reason. But since then, they've rallied dramatically. And we have to remember, this market in the US is driven by retail, not institutions. And the market has completely forgotten the lessons of DeepSeek. And the market's celebrating the fact that the 4 hyperscalers are guiding to spend $350 billion this year on AI-related capex, and everybody's celebrating data center construction. But in my view, this will end up in a massive overinvestment bust. Because if the message of DeepSeek is correct, that these large language models are commodities, and we have to remember DeepSeek is open sourced, then there's clearly a risk that a lot of this spending will be wasted. But the current mindset of the market is the bigger the capex spend, the better.
But why is the market looking at that way? Because you yourself said there's this learning from DeepSeek which has come in, and still the market is ignoring that learning.
Well, it's a retail-driven market. The market thinks AI is the next big thematic, and probably many retail investors are buying stocks because the AI models are telling them to buy the stocks, which leads to a reflexive feedback loop. But on a valuation basis, the US market is trading at an all-time high price to sales. And price to sales is an important ratio to look at, and no one on Wall Street does.
And why not price to earnings?
No, because in my view, a lot of the earnings are artificially exaggerated because it's non-GAAP adjusted accounting. But the other point is the recent tax bill in the US has technical provisions relating to depreciation and tax allowances, which actually has delayed for 2 years the impact on the P&L of these companies of the capex spend. So it's delayed the time they will have to pay for it. So, but the reality is these hyperscalers are moving from asset-light business models to asset-heavy ones, because even they make a lot of money, about $100 billion a year, but $360 billion is a huge amount of money to be investing in capex, and it's not just them. Obviously, there's many other companies investing in this area.
So what's your call out? How long will this rally last?
We just have to watch for a change in sentiment. But the fact that the Fed's going to start easing will be a supportive to the rally, as was the tax bill. That's definitely been a support for the rally. There's another thing which has helped this US equity rally, and that is that the US bond market has not been selling off. But I maintain the view I've had since the start of this year, that the US has made an all-time peak as a percentage of world market cap, at 67% of world market cap on December 24th, to be precise. And part of that view is driven by my base case that the dollar has put in a long-term peak. Because clearly, the dollar's going down, that will impact the... And I'm not saying the US market has to collapse, but there's a potential for the AI capex when it goes down. When that theme unwinds,